So this is the weekly cycle analysis for the S&P 500. Now, what we see here is a very likely big top that has formed in the S&Ps with a lower cycle low here versus that old low. Then we had the failure in the zones that we had mentioned from the 61.8 to this 78.6, and then we sold off. Now, there are two scenarios. There is the red scenario here, which is what we were looking for originally, which is for a push to take out those old lows that formed the week of 613. And then there is the blue and green track right here, which only has us going down to that 61.8 to 78.6 possibly. That comes in from 3900 to 3780. We'll have to see how much selling we get in this period of risk. But you can see when you're late in this dominant cycle, this is where there is risk on the downside in each of these cycles, just what's visible on this chart. But we can zoom back further. We had that sell-off right here late in the cycle. We had a sell-off here, 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 here. Every one of these was late in these dominant cycles where there is risk for money flows to come out and for sell-off. So we have to see what kind of sell-off do we get here in this period. These are our levels on the downside. What I'll show you here is on the daily. It'll give us some really strong clarity for what we can look for. Now, on this dominant cycle on the daily, we have already turned down versus this old low at 4112. So that says that this dominant cycle high formed right here on the left side of the cycle, and we're in a left-hand translation. Note that we have a mid-cycle low that is due to form really right around now. If this rising phase on that minor cycle fails very quickly, meaning just a few days up and then a quick failure, that says very good odds that we'll move through the 61.8 at 3900 and then look at that 78.6, which if we go ahead and look at that, comes in at 3784. That would certainly be on the radar in that corrective period if we were to only get a very minor rising phase. If that rising phase pushes up into these zones, then it would be reasonable to only look down at that 61.8 at 3900. So very important to watch to see what kind of rally can we get off of this mid-cycle low. Obviously, this mid-cycle low was very strong. You can see what happened here. This translated very positively on this dominant cycle. We are not there right now. We are in a left-hand translation on that dominant cycle. So the highest odds in either case are for rallies to fail. But what kind of rally do we get? Do we get up to these zones from 4100 to 4180? If so, then the highest odds would only be for a move down to that 3900 area. If it fails prior to that and then gets a quick breakdown, that 78.6 and then possibly that old low is certainly on the radar if this is a very muted rising phase. So we just need to see what the market gives us here. Overall, we are in that period of heightened downside risk, and any little uptick here is likely to fail, and low odds that we would get through this minus 61.8 at the 4180 area. So that's some of the evidence here in the S&P 500. That next daily low is due 921 to 930.